Hi, everyone. Today, let's talk about Jamie Dimon's comments on a potential U.S. default on its debt. Then we'll go over PacWest again. Then we'll go over the economic calendar. Then we'll get into the charts. Then we'll look at my results for the day and my thoughts going into tomorrow's session. Don't forget to check out the Patreon and the Twitter linked in the description. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jamie Dimon is coming out and saying that the markets are going to see some risk priced into the markets as we get closer to a potential U.S. default. They currently haven't made any progress. They delayed their meetings that they were supposed to have. And by they, I mean House Republicans and the White House. And as this date gets closer, he's saying that we're going to see some panic and market volatility. He then reiterates kind of what we talked about yesterday from Janet Yellen and the potential results of a default. And he says they will be potentially catastrophic. We talked about yesterday about 2 million jobs would be lost if we defaulted even for a short period, and around 4 million if we continued to default for longer than just a few days. And they reference that same article here saying that it would be unthinkable and lead to economic disaster. But of course, the market is a forward-looking entity, and as we look forward, this is what we're seeing. So like I said, I think the market is going to start to price in some of this risk, which might send the market down, at least in the short term, even if they do come to a consensus before we actually default. And speaking of potential issues, we have PacWest as the next runner-up in most likely banks to fail. They tumbled 20% here today after saying that their deposits fell by 9.5% last week. But despite those declining deposits, they still seem to have quite a bit of liquidity. They say they have $15 billion in available liquidity compared with $5.2 billion in uninsured deposits. So overall, it still seems like they're in fairly good shape. This is actually a pretty clear delineation from the other banks that have failed, where they have a decent amount of cash on hand. But it's worth noting that if the government defaults and they don't pay the monthly distributions from their government bonds, that could have a ripple effect in the banking industry as well. So even banks that are doing okay, like PacWest, but might be on the brink of collapse, could certainly be affected even more negatively if the government defaults. Moving over to the economic calendar here, you can see PPI came in lighter than expectations for core. Month over month met expectations. 4-week jobless claim average higher than expectations. And then PPI headline also lower than expectations for month over month. And the core number was also 0.1% lower. So 0.1% across the board, except for core month over month. And then looking at tomorrow, not much of anything. We do get Michigan consumer expectations and consumer sentiment. Import-export price index, fairly interesting as well, but that's about it. And lastly here before the charts, you can see max pain here for the SPY. Highest put strike still at 400, highest call strike 422. Makes sense, we'll probably finish between those two levels. We also have 410, which is pretty high, and then 416 here on the call side. I would expect something between those two levels at the end of day tomorrow. Put call ratio stepping down 1.59, and then max pain here is at 410 for tomorrow. Moving over to the SPY here on the 15-minute and the 4-hour. Not really much has changed, so we ended up dipping down early in the pre-market, tested this low at 410.54, and then pretty much rallied throughout the session, ended up basically at the midpoint from the last few days. You can see that here on the 4-hour chart, we're still in this area of highest volume. Haven't broken out to the upside, haven't broken down either. And like I said before, I do think this is probably a pivot point. We've rallied into the zone. We are consolidating at this point, and then it seems possible that we could get a breakdown from here. But right now, we're still neutral, slightly bullish based on being above the 144 EMA as well as 200 SMA on the 4-hour chart. And you can see here, even after hours, we're getting a little bit of an up move. If we do rally, watching 414.69 and then 418.12. If we do break down, same level to the downside, 410.54, 405.29. Moving over to the Qs, you can see we got a rally in the pre-market similar to the SPY, moved lower, tested VWAP here on the 15-minute, and then kind of chopped higher throughout the day. Not very convincing to the upside. You can see it was only about a 0.3% rise on the day. Momentum slightly bullish, but very weak on the daily chart. And you can see here we're fully above this 424.60 level. We got above it yesterday and closed, and then we got a little bit of a continuation. Not a ton of momentum, but it is higher. And at this point, you have to be looking up to this 330 level. We're still in this rising wedge, and that's the next resistance. I also have a level at 333 that's going back to the August peaks. So watching this zone as my next area of resistance on the NASDAQ. Moving over to the Russell and the Dow, you can see that same down move. Russell did not move much higher on the day after that initial down move, so lower overall. It is up a little bit after hours, like we talked about on the other charts. Maybe we see a little bit of a push up to 174.38. Then we get a continuation to the downside, but we've been chopping in this zone for a couple of days now. We have some pretty clear highs and some pretty clear lows. Still respecting this trend line here. Overall, neutral, maybe slightly bullish on the Russell. And then moving over to the Dow, we're still moving lower in this bull flag type setup. If this does start to break down, then it might be a true downtrend. But right now, looks like a bull flag, still holding above the 200 SMA on the 4-hour chart, looking for a pushback up to this 335.91 level and this upper resistance of that bull flag. Momentum on the 4-hour chart, slightly bearish. RSI also showing bearishness, but potential for an up move in the early part of tomorrow's session. Moving over to copper divided by gold, and then I have the S&P 500 here overlaid with that. You can see that they're pretty well intertwined. We have the August high here where we were definitely overbought versus this ratio. We ended up pulling back into this zone, oversold versus the ratio, pulled back into this zone. Kind of works as a little bit of a balance. And then from November of 22 all the way until March of 23, where we're basically on top of each other. And then here recently, you can see huge SPY outperformance as this ratio has been falling through the floor, looks super negative on copper divided by gold. And this ratio falling off a cliff is super, super bearish. You can see we've taken out all of these previous lows, making lower lows across the board here. So keeping an eye on this one. Definitely interesting to see that disparity between these two averages. And based on what we have seen here historically, I would eventually expect these to come back together at some point in the future, indicating some definite medium-term bearishness on the SPY. Moving over to Apple and Tesla, you can see Apple basically unchanged at these previous highs. Doji on the day, not much of anything to show. Could go either way at this point on Apple. Momentum basically zero. RSI moving down slightly. Tesla, on the other hand, still showing this bull flag on the longer time frames. This is the 12-hour chart. You can see we wicked that bottom. We're starting to show strength here, retesting the 55 EMA. We are above that level now, looking to 177.70. So a little bit of bullishness across the markets going into the end of day, and looks like it might have a little bit of follow through here into the morning session. Moving over to Microsoft and Amazon, these have been chugging along higher here. So Microsoft moving up very slowly, similar to the NASDAQ. Amazon, on the other hand, broke this resistance yesterday and then rallied back up to my previous resistance at 112.99, 113. Now, if that level breaks, there's actually quite a lot of upside potential up to 119. Zooming out here, that coincides with the wick from these previous highs up around 117. Probably going to have a reaction at that level. But at this point, you have a low, higher low setup. You have a high looking for that higher high potentially. We're back into this channel that I was watching from early March. And like I said, upper resistance up around 117 to 119. Moving over to Snowflake and Alphabet, you can see Snowflake has been on a run. Finally showed a little bit of weakness here. Last time we got weakness, it lasted for one day and then the rally continued. So don't be a little overzealous, potentially looking for a short here. But it has definitely run for a while and it might pull back down to the 9 EMA. That would be interesting. Alphabet, on the other hand, continues to rally super aggressively. This is what's propping up the NASDAQ right now. Zooming out, it hasn't been as strong as some of the other stocks. This is the August peak. We're still basically in the middle of that, whereas Microsoft and Apple are starting to take out those highs. So Alphabet has a little bit of catching up to do, and it is clearly breaking out above this contraction and still looks very bullish. Moving over to staples and discretionary, these were actually both bullish on the day, which is interesting. We made a lower low on staples, did not quite get down to that 55 EMA on the 12-hour chart. Still think that might happen here. 75.79 is where it's trading right now. If this continues to chop sideways, we'll see that 55 continue to go higher. And then we might see those EMAs consolidate and then we get the bigger move down. That would be interesting. But right now we have a lower low still moving in this same zone. Discretionary, on the other hand, gapping above my zone of resistance here. We're also above this major trend line that I've been watching. So this is starting to look more bullish. If we get above this previous high going back to March 31st, which is just a few cents higher than where we are right now, then we might see a break up to this 153.90 level, which would be interesting, showing a little bit of strength in the American consumer. It's also worth showing this triple or quadruple bottom depending on what you're looking at here. You have first test, second test, third test, kind of a fourth test here in this zone. And now we're starting to retest that upper level. And like I said, if it breaks out, I do have a couple of dollars higher before we meet major resistance. Moving over to communications and energy. Communications was the top performer for the day, still holding below my resistance at 60.30. If that level breaks, then I'm looking at just around $64 as my next level, so that would be a pretty substantial move. That's really marking these lows going back to 11 March of last year. Potentially a big move setting up here on communications. You can see a big gap down, got below my level of resistance. Now this is interesting because you could expect an island reversal, definitely possible. We get that exhaustion gap, and then if we gap higher tomorrow and we push through this resistance, that could be an indication of some more bullishness. Maybe we retest VWAP sitting up around 82.94. That would be very interesting. We're also showing similar prices to for May, but a higher RSI read, so we have a little bit of price divergence. Similar prices, but higher strength, similar to what we had on this previous run, where we had low prices, similar prices, and higher RSI, leading to that bigger move higher. So that would be interesting. That would also be a low, higher low setup. And then we could look for a move back up to these previous tops and start to wedge up. That would be an interesting setup. But if we do gap lower, then I would be watching for 75.78 back at the bottom of these previous lows. Moving over to semiconductors on the hour and the daily, you can see we moved lower, broke this trend line, and continued much lower. Now we have a high, and a lower low. So that's interesting. That's a little bit of a trend change. We'll see what happens now. If this starts to roll over, it does kind of look like a double top on the daily chart, where you have your first high here at the beginning of May, second high just a few days ago on 8 May, and now we're starting to break down. If we take out this midpoint and move back down to this previous low, that would be very interesting. And then watching for this 118.73 level to break before we get a bigger move down, that would be interesting as well. Daily momentum turning bearish, RSI below the 50 line and stepping down. Overall, semis look more bearish here today than they did yesterday. Moving over to breadth on the 50-day and 200-day averages. Starting with the 50, you can see we went lower through a wick to the downside, but these are still higher lows, which is interesting. Still holding in this zone. Still looks bearish, but we're just not moving down very quickly. 200-day average, it's also worth noting that these are lower lows. So we have a low, lower low, and it looks like we're just getting close to a lower low on this last move down. Maybe we get that bigger move down tomorrow and make that third lower low where we have clear divergence between the 50-day average and the 200-day average. That would be interesting. That would also get us below the 200-day average on the 200-day average. A little bit of inception there, but this does look weak going into tomorrow's session. Definitely weaker than the shorter time frame averages. Moving over to the dollar on the hourly and the daily chart, you can see we had a higher low setup after that previous low at support, and then we rallied really aggressively from there, took out these previous highs. Now we're looking back to the highs onto May, looking at this trend line up here at 102.41. That's interesting. We also have the 55-day moving average at 102.76. So if this starts to break out, that should show more weakness in equities, which is a little bit counter to what we've been seeing across the markets. So definitely keep an eye on this one overnight. I'll tweet something out and put something on the Patreon early in the morning for tomorrow, looking at the overnight price action on the dollar. So keeping an eye on this one pretty closely. If this starts to go higher, I would expect equities to go lower in tomorrow's session. Moving over to high yields and 20-year bond treasuries. Junk showing some weakness off of resistance. These charts have honestly been very boring, so I haven't been talking about them in every video, but you can see we're still in the same zone that we've been in for a couple of days. We tested resistance here. We're selling off a little bit now. We'll see what happens. If this moves lower, then we should expect equities to move lower as well. Momentum not showing us much of anything. RSI stepping below the 50 line, so that should indicate a little bit of downward movement as well. We have the 200 sitting at 91.71 and then watching that 91 level as well. So weakness on J&K. TLT actually showed some strength, meaning that yields went down a little bit, which is probably what held up the NASDAQ versus the rest of the major markets. But now we're at resistance. We'll see what happens here. We've been chopping in this zone for a while as well. You could argue a head and shoulders type pattern with a very, very slanted neckline. Overall, not much has changed, and we are still in the same zone that we have been in going back to early March. Moving over to the VIX, not much to say here. We went sideways for another day. We wicked this trend line. We also wicked this level here at 18, rejected off of that zone. Looks like we're setting up a higher low. Maybe we see that bigger pullback in the morning session. That would be interesting, but otherwise still definitely moving sideways. You can see all of this chop on the daily chart, not showing much of anything. Slightly bearish momentum, slightly bearish RSI, but like I said, slightly higher lows on the hourly chart. Moving over to my accounts, you can see I did pretty well here today. I think it was actually a little bit more than 250 on the day, but overall pretty good. Definitely met my profit targets here for the day. I still have not taken a position in my IRA. That seems to be a mistake here recently, but it does feel like we're going to see some lower prices, and that just hasn't happened yet on the NASDAQ. You can see we had a $1 up move. We're moving a little bit higher here after hours. I'm definitely bearish going into tomorrow's session, and you can see those negative deltas here. But otherwise, looking at my positions, I had 321s, 322 puts, expiring worthless. I also have these 325 puts, which will expire worthless as well. And then 328 calls, those will be worthless. For tomorrow, I have 320 puts. Those should be in good shape. 323 puts. I meant to sell 2 of those, but I guess I only sold 1 here. And then tomorrow I have some 326 calls and 328 calls. We'll see how this plays out. Like I said, I am neutral to bearish, mostly bearish looking at tomorrow's session. But it is worth noting that the NASDAQ has been quite bullish here recently, so I can definitely shift to bullish pretty quickly. Like I said, neutral to bearish, just based on everything we're seeing across the markets. Let me know down in the comment section what you think of the default battle. Are we actually going to default? Is PacWest also going to go bankrupt along with the others? Definitely interesting to watch here going forward. And will the market start to sell off based on a potential default? Definitely like and subscribe if you got any value out of this video. Check out the Patreon and the Twitter. Make sure you hit the bell before you take off. Otherwise, of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.